Welcome to the Rent to Retirement Podcast, your resource for passive real estate investing and retirement strategies. If you're new to real estate or planning your financial future, you're in the right place. Join us at renttoretirement.com to find your path to financial freedom and an easy, carefree retirement. Enjoy the show.
This is your host, Zach Leemaster, here with my co-host, Samuel Hack.
Thanks, Zach. Yeah, another great interview today with Aaron. He was a pretty cool guest, really hardworking guy, and saw the silver linings in the COVID era when most people shut down. Some good points that he made, especially about real estate opening up opportunities and getting started in turnkey.
Huge mindset, shift for, I think a lot of people will benefit from listening to just Aaron and his mindset. He's purchased multiple properties in multiple states. His job, he travels internationally for, but investing out of state didn't matter to him. It was all about having the right people in the right place and the mindset, because absolutely during COVID, a lot of people could shut down or be more reserved. He used it as an opportunity, specifically financially with the CARES Act, to be able to invest. So I'm really excited for everyone to listen to that. Let's go ahead and jump right into it. All right, everybody, thanks for joining in. Today we have Aaron Settles with us. Aaron has been an investor over this past year. He's purchased one property in Ohio so far, one in KC, and he's currently under contract for another property in Kansas City. And so part of this series, what we're doing is just some case studies from current investors to see what their experiences have been. So Aaron, appreciate you taking time to join us today. Can you just kind of start off by giving us a little background about yourself and kind of what led you to start investing with Rent to Retirement?
Sure. Glad to be here. So I am a project manager for a local branch of a global engineering and technology company. I'm a trained engineer, but I pretty tied up with work, my W-2 most of the time. 2020 has been an interesting year for everyone. And I had some opportunities to think, some forced opportunities, a couple of weeks that my company required me to take some mandatory vacation, and kind of made me realize that my dependence on that income stream was pretty severe. And I didn't necessarily love that position that I was in. I've known about real estate. I've stumbled on it in the past, and it was kind of one day I'll do that. One day I'll do that. And, I really started listening to podcasts and things and focusing more on it. And I kind of came to the conclusion of why not today? Why someday? What's the saying? The best time to plant a tree is 20 years ago. And the second best time is today. Right. So same goes with real estate for me, for sure.
When you started working with us over this past year, this was your first kind of endeavor into real estate.
That's correct. I purchased my primary residence 5 or 6 years ago. I had no idea. I'd been living in an apartment. I kind of, like I said, kicked around the idea a couple of years ago. I met with a local agent and kind of talked through it. And I just didn't really feel like I had the funds available at the time. I hadn't really taken the time to research, all the different strategies that there were in real estate. And so I just, like I said, postponed it to later. And it wasn't until this year that I really pulled the trigger on real estate as an investment.
Cool. And Aaron, where are you joining us from? I know you're investing, sounds like out of state, in Ohio and Kansas City.
Yeah. So I'm in Tulsa, Oklahoma.
Tulsa. Okay. Very cool. What is your biggest why? You mentioned for real estate investing, you mentioned the dependence on that single W-2 income. I think a lot of people have that fear. Are there some other things that got you to, go over the edge and really pull the trigger on this?
Opportunities that were posed on the funding side that seemed a little bit too good to be true, but just they weren't. They were true. With the CARES Act and things that allowed for some different strategies that may not be available in the future. Interest rates are very low right now. They will probably continue to be low for a little while, at least. Now, as opposed to another time, the time just seemed right. I want to provide myself with maybe not perfect, complete financial independence, although that is a great goal to have for the long term that I think everyone should have, that I didn't have until, really this past year, and really digging in and seeing that it was possible, because real estate is not something you're taught really
Mhm.
in high school, in college. It's not that hard, but it does take a little bit of work to understand what needs to be done and how you can do it profitably. So essentially, my goal is to build some of that financial independence with additional income streams, essentially with multiple properties, multiple tenants paying rent, multiple income streams. But hey, now I can explore some new entrepreneurial endeavor or jump to a job that I always thought was fun, but maybe didn't have the paycheck to support the level of fun that my lifestyle had grown to, right? So it's kind of evolving. As I said, this last year was kind of my first foray. So as I continue to learn and just the process of being a landlord and working through tenant issues and working through maintenance issues and things, I mean, I'm learning. I'm still listening to podcasts. I'm learning about other strategies. So it's all growing and evolving, but I'm pretty hyped on real estate right now, which I imagine you guys are as well.
That's great. I think the main thing is you're just taking action, right? It's, to your point, you made it earlier, the quote you made about, planting a tree. I get asked a lot, and I hear the common theme a lot about asking people what they would have done differently, or, if hindsight 2020, if you would go back and, what things would you change? Almost unanimously from successful investors, it's a common theme of they wish it would have either started earlier or been more aggressive earlier on, and that's a common theme for everybody. Everyone can say that, but the point is, we're here now. What are we doing? And you're taking action, which is great. Can you just give us a real quick snapshot of like, where do you see this long term? What's kind of your overall goals in investing, and kind of what do you ultimately want to achieve through real estate investing?
If you asked me at the beginning of this process, which I think we started at the beginning of October, we actually went under contract on the first property. I think I would have said, "Oh, retire early, live on a beach." But the more that I just learn about real estate in general, and building a portfolio, and protecting those assets, and being a business owner, it's kind of opened my eyes to the active side, the more active side of real estate. I'm not saying that like turnkeys, oh, I'm over it, I'm ready to move on. I definitely see the power there, and I've already been connected with some great local assets in those markets. I would like to continue those relationships and build those portfolios. But like I said, there's lots of other strategies that I'm pretty excited about. So I said with my job, I work for a global company. So, most of what I do is on the other side of the world, the companies I'm managing, fabricators, things like that. So Kansas City's not too far away. I mean, a phone call is all I get most of the time. I mean, if I need to get on a plane and go to Korea in non-COVID times, we do that. But we're all in a different world right now, and telecommunication is a thing. So, out-of-state investing wasn't like a terribly scary thing for me. Along those same lines, I'm very interested in short-term rentals. I think I'll be heavily looking into that.
Yeah, it brought up a good point. I think that a lot of people initially, they have this mindset that if they're newer investors, that they want to invest locally because that's what they know or that's what they feel comfortable with. Well, in today's world, I mean, you could easily invest really wherever. It really comes down to, regardless of the location you invest in, having the right people that you're working with.
Yeah.
But I mean, locally or not, I mean, I've had property management teams locally that did a terrible job. And the point is, you're working with the right people. I mean, the most successful investors invest where they can get the best returns, and then surround themselves with the best team to make sure that those investment properties are going to be successful long term. That's the philosophy we've taken over time. You were fortunate enough that you had that mindset going into it, that, hey, I mean, it's all perspective, because you could invest anywhere, you know what I mean? And if you needed to jump on a 1 or 2 hour flight, you can be there if that's even necessary, which it likely won't ever be. But a lot of people have that issue of, I'm just not comfortable with investing in a house in a market I'm not familiar with, and I'm not local to, that I can't drive by. What would you tell someone like that that has that reservation and apprehension about getting started because of the property not being local?
If you're really uncomfortable with it, right, there's lots of research that you can do. There are specific books on out-of-state investing that you can dig into. There's a process that's required by the lender to verify that that property is what it's stated to be. You know, it has to pass certain inspections. It has to pass certain appraisals. Those are professionals that are hired, third-party professionals to conduct a job. And you have to trust licensed professionals. You have to trust that they are adhering to their duties per their licensure and such. And you know, there's plenty of pictures available. All the local teams have offered anything and everything I could have wanted as far as pictures, before, after, repairs. At least it is a physical asset. It's not like you're buying a stock. What is that even? I mean, you know,
Go down a whole different rabbit hole with that one. You're 100% correct, Aaron, in the fact that you just have due diligence done, right? Your is your majority partner on the deal. They're fronting 80% of the money. They're going to make damn sure that the house is priced appropriately for the market. They're going to have a third party required appraisal, you know, make sure that the property is inspected and in the condition that you anticipate. And that's the same due diligence that you would have done regardless if it's a local house or not. You're relying on those professionals to ensure, you know, you're doing everything you need to do to make sure that's going to be a successful investment. I love it.
Yeah, that's good stuff, Aaron. I was curious too, with the lenders you've talked to and as well as just our whole process with the rent to retirement team or our partners, how did we assist you, and what were the most valuable aspects to the process that you were maybe most scared about or concerned about at first, but that we handled well, or maybe didn't handle that well?
You know, like I said, I've purchased a house before, but it's been 5-6 years at this point. So nothing was too foreign, apart from I'm not living in this home. I'm not managing the person who is living in this home. Everyone I've come in contact with has been really stellar, from the local turnkey providers to, you know, their assets, to now I'm working with property management companies. They've walked me through all my questions and setting up everything. Really, I don't know, A, that I could have found these people, but B, definitely it would have taken a whole heck of a lot more time and effort on my part to essentially gather what amounts to a great team. And I think that's really key. Like you said, Zach, for even if you're local, you need a great team to be successful.
If you had one piece of advice to offer to somebody that's looking to get started, that is having trouble getting over that hump, or just based on your firsthand experience, any reflections or piece of advice you could share with a newer investor that's never bought a property, what would that be?
I think you need to take regular action, and that action isn't necessarily buy the first property. It's building towards buying that first property. So whether that's getting your credit in line, whether that's you know, opening that savings account or money market account or something to build for your down payment, just every day, whether that's researching an area or a turnkey company or a, you know, something, take the steps every day that progress you, and don't get caught in the analysis paralysis. Just move forward. Some things you have to learn by doing, by experiencing.
I love it. Consistent action over time. I agree that with that 100%. That's the same thing I would echo, because not once you get past that first property, it's not losing that motivation in future years. It's always taking that, like, that never stops, right? That should never stop, what you mentioned. So Aaron, listen, it's been a pleasure to have you. Thank you so much for taking out some time. This has been some really huge key points. I think a lot of people are going to find a lot of value in listening to. We're going to connect with you in a couple of years when you're, 200 plus doors and pick your brain again. So my name is Zach Leemaster. I'm your host, and I'm here with Sam Hack, our co-host today.
Zach, thanks for having me. This one was really, really good today. Yoki is quite a humble guy, really studly hockey player, cool guy. Definitely would have a beer with him, but super down to earth. And yeah, he's really realistic about his investing journey. So this will be a good conversation for the listeners.
Yeah, absolutely. So today we interviewed Yoki Ryan. He's a professional NHL player and has been for many years. He is a new real estate investor, but he's been extremely aggressive. We've been working with him over the past 6 to 7 months, and he's went from 0 to 10 properties within just a short period of 6 months roughly. He had 0 mortgages out, and he maximized his conventional mortgages all at once, and he's doing fantastic, being super successful. But yeah, I thought that was a great interview. He brought up a lot of excellent points. He used some creative financing options where even though he had the money to put down as a down payment, he used a line of credit. So he's basically using none of his own money and maximizing his returns, obviously, through that. So lots of good stuff on this. Anyways, lots of good stuff for everyone. Without further ado, let's go ahead and welcome Yoki. All right, everybody. Thank you for joining in on the Rent to Retirement podcast. Today we have Yoki Ryan, who is a professional hockey player and also an aggressive investor. He started working with us roughly 6 to 7 months ago and went from 0 to 10 properties in his first few months. And he used some very creative financing options to get there while making a good wage. He also had some access to some credit lines and things like that we're going to dive into. So, Yoki, thank you for joining us on the podcast. Let's go ahead and start off by you just telling us a little bit more about yourself and your background.
Yeah, thanks for having me. I'm a professional hockey player. This season that's about to start here will be my 6th year pro. I grew up playing hockey my whole life. My dad put me on skates when I was 4 years old, so my whole life is pretty much evolved around hockey. I played hockey in college at Cornell University. I ended up staying all 4 years and getting my degree, which is something I'm pretty proud of. And then I got drafted by the San Jose Sharks after my freshman year of college, and then luckily enough, after my senior year, they offered me a contract. I played my first 2 years in the NHL for the San Jose Sharks. Last season, I played for the LA Kings, and right now I am currently in Carolina in training camp playing for the Carolina Hurricanes.
Right on. Very cool. How did we get to the point where we're here today having this discussion? I mean, you're successful in your professional career playing hockey. That keeps you very busy. Where did real estate come into this? Where did the initial bug and interest even to start to look at real estate investing? Where did that come from?
I've kind of always had an interest in real estate. I'd say for me, it kind of started while I was in college. I didn't really go through any investing experience because after my freshman year, sophomore, junior, senior years, we would all live off campus, and you have to go through the process of trying to find a place to live, dealing with different landlords and whatnot. And I remember thinking to myself how, I don't know, it seemed pretty lucrative for the people who own these houses because they were renting out each bedroom to there would be 5 or 6 of us living in a house, and they were getting, our college town was pretty expensive, like $800-900 per room. So I just remember thinking to myself wow, this seems pretty interesting. And then kind of was on the back burner for a while, didn't really think about it too much. And then once the coronavirus hit and our season got paused in March, I was back home in New Jersey where I spent my off seasons, and I just had a bunch of downtime, and I was just, as most people, I had a lot of time to think, and those thoughts pop in your head, like what you want to do whenever you're done playing, because you never know when that's going to end. And somehow I came across Bigger Pockets, and then I kind of just started listening to a bunch of their podcasts, checking out the Bigger Pockets website. And that's where I first heard about Rent to Retirement. I was listening to a podcast, checked it out on Bigger Pockets, was looking at some of the reviews you guys had on there. Talked to some people who had done business with you guys. And then one day I just, decided why not. I signed up for a call with you, Zach, and yeah, kind of here we are now.
You're thinking about life and finances after your professional career. All the time we hear about professional athletes that they make great income while they're playing, and then afterwards they end up broke,
Yeah.
They can't maintain their lifestyle. And so I think it's very cool. I'm sure with many of your teammates and your colleagues, but potentially just don't even think about investing, or I'm sure some do, but I love the idea that we're having this conversation now where we're trying to prep for the future, regardless of how long your professional career last, at some point, it is going to come to an end, and then you need to prepare for the skill set of how to maintain that same type of lifestyle and income post your career. It's not about how much you make, it's about how much you keep, right?
Yeah, exactly.
This is your first investing experience, right? You haven't had previous rental properties?
Yeah, correct. This is my first go at it.
I believe you've closed most of your properties, but you're basically going from 0 to 10 right away.
Yeah, correct. I kind of just, jumped in. I had the funds to get 10 right off the bat, and I just figured why not just dive in head first. And as of now, I've closed on 9 of them, and I'm still just waiting on the 10th one. I think there's still some rehab going on the house, and just kind of waiting for that to get finished up. But yeah, 9 out of the 10 are I've officially closed on now.
So that's fantastic. I love that. Everyone's in a different position. They have different capital positions. You're in a position where you had the capital likely to buy all these houses and put the 20% down with conventional financing. You chose not to do that because you have this creative line of credit, which we'll get into. But what is kind of the next few years look like? What's the ultimate goal in real estate? I mean, we have a good starting point right now with these 10 properties. Where do you kind of see yourself down the road taking this?
I don't want to act like I have it all figured out, because I definitely don't. I know this is a good place to start, and I'm fortunate that I could do that. But I mean, I have conventional loans on all 10 of these properties, so I know that you can only have 10 at a time. I guess I want to see at least maybe for a year or two. I'm not completely sure, but how long, but I want to see how they do. And then, I've seen some stuff about other people who've done like 1031 exchanges to grow my portfolio. And, I want to keep doing this while I'm still playing. And as long as I can keep playing and making good money, I want to put that money to work and put it to good use and just keep investing it. And so hopefully, it comes to the point where once I'm done playing, I'll have a pretty solid, foundation to lay back on, and then, kind of keep growing it from there. But I definitely want to keep growing and adding more properties, but I don't know exactly, how I'm going to do that. Or I know there's different ways of financing and whatnot, but it's definitely something I'm going to have to figure out.
Yeah, absolutely. I mean, and you don't have to have, no one knows exactly where things are going to be. I mean, goals are so dynamic over time, but the important part is that you're taking action and you're starting. And throughout this process, you're becoming a more educated and sophisticated investor. You're learning about all these things like 1031 exchanges and ways to grow your portfolio that you can employ those strategies over time to grow. But I think you realize it's the journey, right? You're taking action, you're just getting started. And by taking action and getting that education, that's what's going to allow you to further expand your portfolio down the road. So
what were your main motivations for going with the turnkey route instead of learning everything yourself?
Like flipping houses would be the way to go, or something along those lines. It's a lot more active, and it takes a lot of your time and effort and energy. And, hockey is my main job. Like that's the full-time thing for me. So even in my off season, I'm constantly training, going to the gym, skating. So then once I came across you guys, it just seemed like a way more passive way for me to get into real estate while still being able to learn all these little things that go along with it along the way. So I could still, let hockey be my number one focus, my main priority. It was way more passive than going out and trying to flip a house or doing the whole birth thing, something like that. So I just thought it made the most sense for me to start off.
You brought up a really good point that so many people, especially when they first get started, they, have this idea and then they start to learn about all these different concepts and flipping houses and doing the burst strategy and things like that. I mean, it seems appealing, but you got to be realistic with what your time frame really will allow for.
Yeah.
And being a new investor, I mean, there's a lot of variability in that. And this comes from, the perspective of us flipping multiple houses and being involved in multiple transactions for many years on a professional level. There's always unforeseen variables, unforeseen rehab costs, longer holding costs, especially when you're talking about private money that can add up very quickly. Contractors that do a crap job or just walk away from jobs, investing in an area you're unfamiliar with. So I think the turnkey route is an easy way to establish a presence in some markets that have a high propensity for success based on cash flow. You get to tap into your immediate market or your immediate team and network that you can further leverage over time. But it gives you a good starting point where, yeah, you don't have to go out and buy yourself another 80-hour work week trying to do it on your own and go through those same stumbling blocks, which can be very time consuming, frustrating, and expensive. And we try to take the approach, Yoki, I think you realize this, that, we try to come from a comprehensive type of approach in assisting our investors building a successful portfolio and business, where we make sure that you're set up on the tax, the legal, the accounting, the financing side. There's so many pieces of the puzzle that really go into building a sustainable, successful business model over time. So that being said, I mean, can you speak to a couple points just specifically that you felt Rent to Retirement was able to assist you with, that you found beneficial?
Yeah, that's a great point. I actually kind of forgot about that for a second, but you guys put me in touch with Nevada corporate headquarters, and they were able to help me set up, an LLC for this, I guess, little business I have now. So that was very beneficial. They were very easy to work with and walked me through all the steps. I mean, it was pretty simple on my end. They kind of just told me, what the best, I don't know, the proper like legal entity for me was. And, that was a LLC or a disregarded LLC, I think. But so I have my own LLC now, and they help me fill out all the proper paperwork, file the proper paperwork in each state where I have these rental properties. They help me set up, a real estate privacy trust for each property, a revocable living trust. So now it's the first time I ever like set up a will type of thing where, if I were to die, then, who I would pass on my real estate stuff to. So that was kind of cool. And, but it definitely, helped me feel more protected. And, obviously there's some costs that go along with it, but I think it's well worth it. And, now that I have it set up, I can just kind of, use that LLC going forward for most of my real estate investing.
Yeah. I mean, having proper asset protection is huge.
Yeah.
Especially if you're an entrepreneur, if you have assets, if you're a high income earner, you just have more exposure. And so I think you got to make sure that you're adequately protected and that you have, you're filing taxes appropriately.
What have been the biggest highlights throughout the process? And, you've closed on 9 already, but I remember like myself forming an LLC for the first time, like stamping my little official paper. And I'm like, wow, I'm official now. This is so cool. Like what have been the best parts of the process for you?
Yeah, that was definitely cool. Filling out all that paperwork, and like you said, I remember doing that stamp thing as well. So that was pretty cool. But I would say the coolest moment for me so far probably has been most recently, after seeing, all this money kind of going out that you're paying for the down payments and all that. And then just recently, was in the beginning of January here is when I got my, first checks from the property management companies that were owed to me. And, seeing after having paid, for example, like the 2 properties in Minnesota I have, after I paid the mortgage payment online, and then the check they sent me, seeing that like, oh, I was able to make that payment, plus I have like, $350 on top of that. That's just for me. And then it's cool just seeing like, oh yeah, like, I mean, it's not even coming out of my own pocket, and I'm pocketing some of this money.
The mailbox money, once you actually start to cash the checks on the back end, that's obviously the fun part, getting paid. But, the property itself, every single month, during your mortgage payment, there's principal reduction. The tenant's paying the loan down for you. The house is going to appreciate over time. You have these tax benefits and depreciation, all those things add up over time, and that's the stuff you don't see immediately, like you do the cash flow, but that's also increasing your net worth and putting in a position where you have access to that down the road to further expand your portfolio. And then, once you have a portfolio of multiple properties and you can qualify as a real estate professional, then you can do some really cool stuff like the cost segregation studies, where you can do accelerated depreciation and dramatically reduce your taxable income, even from your hockey salary. And anytime we can pay less taxes, that's fantastic.
Well, you are off to a pretty blazing start here, but obviously, and Zach knows, you can just keep building and get smarter and trading up to cooler stuff and making more mailbox money. But in the next year or so, you still have one property close on here, but over the next year, 5 years, or maybe even 10 years down the line, where do you think you'll be headed in your real estate journey?
It's tough to say. This is working out for me right now. I definitely, or I hope, and I think, just as my experience with you guys so far, I want to continue to keep working together, and I want to talk to other people who have more experience in the game, like, yourself and Zach, and, kind of be mentored in a sense with, what else do you think I should be doing, or just keep trying to work together and building that relationship. Cause it might sound like, I'm experienced that I have 10 properties, but I don't really know that much. I'm kind of just trying to learn on the fly here. But I definitely want to keep, growing and growing as much as I can. And then whenever I am done playing hockey, cause obviously that day is going to come, real estate's something that I enjoy and interests me. So I could see myself, maybe trying some of those things out that I was talking before, where I would need to have more of an active role in like doing the BRRRR process or something like that, and kind of taking more of a hands-on role myself, or trying to flip a house, something like that. So, maybe that's in the cards, but for now, I'm just going to honestly try to keep playing hockey as long as I can, as long as my body holds up and allows me to, and teams are willing to pay me money, and then just keep putting that money to work and kind of relying on you guys to help me out along the way.
Well, good luck with everything upcoming. Hopefully you're in good health, good shape, and let us know anything you need.
All right, thanks guys, I appreciate it.
Thanks, man.
All right, have a good one.
Today we had a pretty cool conversation with one of the rent-to-retirement investors, Joseph, and there's some real golden nuggets, especially towards the end of the episode. So I think the listeners will enjoy it a lot.
Yeah, I think Joseph had a lot of good things to mention. He talked about building generational wealth. He talked about some of the mental challenges and how to get over that obstacle of making your first investment, which I think is crucial for anybody. So I think they'll be invaluable to listen to.
Yeah, definitely. As well as him talking about risk and how he overcame it, meeting up with a group. He can go as more in depth into that. And I know that was big for myself. So more people can learn from it, but it was really the first time I've heard that on a podcast or anything. So definitely something to learn from.
Let's go ahead and jump right into it. All right, everyone. Thanks for joining us on the Rent to Retirement podcast. Today we have a guest, Joseph Swizer. He is an investor with us that has purchased one turnkey property in Kansas City, Missouri, and is planning to expand his portfolio over time. And so today we just want to go through a case study of an investor that has actually bought property with us and go through and talk about his experiences. I think this will be very educational for anyone looking to invest with us as well. So, Joseph, thank you for joining us on the podcast. If you don't mind just starting by giving us a quick background kind of about yourself, what you're looking to do in real estate, talk about kind of how you got started with us, and we'll dive into the details after that.
Thanks, Zach, for having me on the podcast. So I am a full-time electrical engineer, so I don't work in the real estate space, and that's not really my background. But I've done some research on real estate and was really looking at how I can get started while minimizing my time and my risk that would be needed. And turnkey sounded like a great option for me. I actually heard of Rent to Retirement from the Bigger Pockets podcast advertisements and reached out to Zach and kind of went from there.
Good deal.
Very cool. Very cool. Joseph, yeah, I was curious about your big why for real estate investing in the first place. Like, how did you end up listening to Bigger Pockets? And then what made you interested in getting started?
So my why is I really want time freedom. So I want to be able to do what I want when I want to do it. I don't really want to have to answer to somebody. If I want to go somewhere for 2 weeks, I pick up and I go somewhere for 2 weeks. Right now, working full time, I don't necessarily have that luxury. My job is flexible, so I definitely don't have the worst position right now, but I want the flexibility to do what I want when I want. Me and my wife plan to have kids. I want to be able to support them, spend time with them, and do all that. So it's really I'm looking for time freedom, and then also I've started looking into the generational wealth aspect too. So that's definitely appealing to me. So I think time freedom and the generational wealth are really my biggest whys for real estate.
Yeah, that's fantastic, Joseph. I think you brought up a good point because a lot of people initially are interested in investing in real estate because of the immediate potential passive income. Obviously, over time, as you grow your portfolio, you can get to the point where you have enough residual income to potentially replace your active income for financial independence. I mean, that's generally speaking what a lot of us are looking for, or at least more financial security. But a lot of people don't realize that the generational wealth aspect to investing in real estate, especially from a tax perspective, because once you're growing equity through appreciation and debt pay down and things like that, you have the opportunity to, possibly 1031 exchange and expand your portfolio over time, which is a strategy we work with a lot of our clients on. Eventually, those taxes could possibly be forgiven as you pass it on to your children to create generational wealth, like you said, which obviously continues to grow over time. So I appreciate you bringing that up. That's a great point. Can you tell us a little bit or talk to a little bit of your experience as to, why you chose turnkey versus other investing methods? As a common question we get quite often is turnkey the right investment path for me? A lot of times this is a good way for people to invest that are busy professionals that don't have a lot of real estate experience, that live in expensive markets, that are looking to invest in areas where they're not local and they need that established team. Can you speak to that a little bit as what made turnkey the right choice for you to get started?
So for me, as I mentioned earlier, I work full time outside of real estate. I don't have a background in real estate. I don't have a background in construction or rehab or any of those. Without that type of background, I was trying to minimize the time necessary and minimize the risk. There's a lot of time in managing rehabs and understanding what goes into them and being able to run all the numbers. There's a lot of risk involved. I wanted to get started investing quickly, and trying to learn that whole process, and the risk involved and the time involved is not really appealing to me right now. I stumbled upon the turnkey market, and it really sounded appealing to me because everything is taken care of for you. So you don't have to worry about rehabbing properties. You don't have to worry about finding tenants. A team is set up. They do all that. You buy the property, and it's cash flowing from day one. I reached out to Rent to Retirement. I did my due diligence. I read through reviews and all that to vet the team, and I really felt comfortable going to work with them. So it was really, those kind of aspects that really brought me to the turnkey route.
Joseph, that's great. That's great to hear. And I like that you mentioned there's some risk in not knowing what you're doing if you don't have a background in it. Zach and I, work in the real estate industry. So we get it, and we're already inside the minds of contractors and real estate investors and whatnot. And so, there's a big human element of investing in real estate. That's important to learn. So what made Rent to Retirement the ideal partner for you? What valuable aspects did we bring to the table to help you in your investing journey?
Yeah, so I heard of Rent to Retirement through the Bigger Pockets podcast, as I mentioned earlier. So that alone gave me a lot of confidence. If they're going to have advertisements on their podcast and on their platform, I have a good amount of trust in them, so that they vetted these companies and everything. So that was the first thing. And then I read through a lot of references and reviews of people that worked with Rent to Retirement in the past. I was seeing a lot of good reviews, and I was really starting to feel comfortable that this would be a good opportunity. And then Zach always starts with introductory phone calls. So I set up an appointment and I hopped on an introductory phone call. And after that phone call, I really felt like this was a good opportunity for me. So we kind of sat down and we looked at potential strategies for what I was trying to do. It gave me the confidence that I had enough knowledge of real estate from, the reading that I was doing, the podcast and all that, where I could get started and take the step into the first investment. So those were the kind of things that brought me to Rent to Retirement, the reviews, the advertisements, and all that. And so far, my experience has been exceptional. Through the whole process of finding a property or selecting a property, all the way through to a closing, the communication has been excellent. Any concerns I had were addressed. I really felt comfortable moving forward through the whole process. They provided me with a lot of recommendations for lenders, for insurance agents, for property management and things like that, and inspectors. So I felt really comfortable. They were really trying to set me up for success with this first property.
That's great, Joseph. I appreciate the insight. I mean, that is a goal that the value that we try to bring to our investors is to provide a comprehensive approach into helping our investors build a business. Because that's truly what you're doing when you're building a rental portfolio. You're building a business, and like you mentioned, it requires an entire team. You know what I mean? I always want to mention that because our company, we want to help investors with building a sustainable business model long term and incorporating all those aspects that you need to from a tax, legal, accounting, financing perspective. Can you walk us through the process as far as how you mentioned there were some differences between purchasing your primary residence versus a rental property?
So first, like I said, there was an introductory phone call. So me and Zach sat down and we had a discussion on, what's a good strategy for going forward. From there, I was provided with properties in a few different areas, cash flowing areas. I ran the numbers on a few different properties and I selected one. This one happened to be in Kansas City. And I really ran through the numbers and I really felt comfortable kind of moving forward with this property. From there, I said, Zach, I want to move forward to this property. So that at that point, I was sent over, the sales contract. From there, it was working on everything leading up to closing on the property. At that point, the due diligence is really the most important part of that. So I started looking up the market and what that kind of looked like, population growth, income to rent ratios. Then I reached out to a few different lenders to see what kind of rates that were available and to see what would be the best option for me going into this property. From there was weekly meetings kind of keeping me on track through the closing process, making sure all the paperwork was taken care of, making sure all my concerns were addressed, and moving through with closing. Also during the due diligence process, you vet the property management, make sure that's going to be a good fit. I really felt comfortable kind of moving through with this property. I was looking for a property that kind of fit my budget. So the property I selected, the purchase price was $68,500. And I was able to get a 20% down loan. Closing cost, all in, I was around like 14K, right around there. So the cash on cash return was looking very good for this property. For some people, they feel like if you have property management, you're not going to be able to make any money on properties. And I disagree with that.
And Joseph, this is a single family home?
Yes, a single family, 2-bedroom, 1-bath home in Kansas City.
And what's the monthly rent for it?
The monthly rent is $650.
Okay.
So just to review those numbers, purchase price 68.5 with a 20% down payment, which is typical for an investment property. We always need to put 20% down with single family. You were able to get a 30-year fixed conventional loan. What was the interest rate on that loan?
4%.
Excellent. Would imagine you're probably high teens, low 20s for a cash on cash return on that specific property, which is fantastic. To your point about the management piece, I think that, yeah, good property management, well, one, it's essential if you're growing your portfolio large enough, but it's like a good CPA. They really pay for themselves, to be quite honest. Yes, they take a portion of your rent, typically between 8 to 10%. But it's like, what is your time worth? I mean, you're a professional, and if you're managing one property, sure, that's probably feasible. More difficult if it's out of state, but as you grow and scale your portfolio, it's going to be more of a full-time job. It's like, what is your time best spent doing? And I think you would agree, Joseph, that you probably earn a higher wage, working in your regular career versus taking tenant calls and changing toilets and all the fun stuff. I always want to tell people that real estate has inherent risks, that if you have enough properties for a long enough period of time, you're going to have tenant issues, maintenance issues. Those things happen and they come up. So let's just talk real briefly about maybe any obstacles or struggles you had throughout this first process and how that was addressed and handled.
Fortunately, I didn't have too many issues going through with this property. There was one issue just with the tenant, but the team was very forthcoming with information and reaching out to the tenant, and everything was kind of handled and taken care of in an acceptable manner. The rent to retirement team and the partners were there. They handled the situation, and it's smooth sailing from here.
This obviously was a really good way to get started here. Property wasn't too expensive compared to some, other markets out there, and definitely good to get your toes in the water before doing something really big with a lot of risk. You mentioned, being more risk averse.
I mean, we all got to start somewhere, and sometimes you just don't know what you don't know. And that's why turnkey is a great option for people that are getting started, because you get immediate access to that network and that team. Most people lose money on their first few real estate investments where they're trying to take on too much that they don't understand or don't know. I've been there as well, and that's okay, but if you have the opportunity to tap into a network and an organization where you can get some mentorship and guidance to build your confidence and your experience level, I think it just puts you light years ahead in where you can go. And real estate is so exciting because there is so many different ways you can invest. Turnkey is just one of those routes. Great route to get started and build your confidence in education and tap into a market that you're unfamiliar with or not local to.
Can you add anything else about what advice you would give to people who are interested in getting started in real estate investing and are still waiting to take the leap?
If you're really struggling with taking that first leap, the experience you learn or the information and everything you learn from that first experience is invaluable. You're going to do your research. You're going to learn how to analyze your numbers. You have to build up your confidence through some of those things. Surround yourself with the right people, and then jump in. Take that first step, make that first investment. And like I said, you'll learn so much from that first investment that even if it doesn't work out perfectly, it'll be worth your time and effort in the long run.
I love that. Risk is inevitable, and failure is sometimes more important than hedging that risk all the time. I love that a lot.
And the educational piece is so huge because, yeah, I mean, think about this. If you were to wait, you get stuck in this analysis paralysis like so many people do for say a year. Yes, that's a year of income and appreciation, debt pay down, tax benefits, et cetera. It's a year of education you would have lost, and you don't get that back. Anyways, fantastic interview. Thank you so much for taking the time out to talk about your experience. I'm sure people will have plenty of questions and want to reach out to you. You told us that, you're available to answer questions if anyone wants to talk about your experience in greater detail. If they wanted to reach out to you, what's the best way to contact you?
One, I'm on Bigger Pockets. So if anybody's on there, reach out to me on there, Joseph Schweizer. Feel free to send me an email. at josephschweizer36@gmail.com.
Excellent. Joseph, thank you again for your time. We look forward to helping you expand your portfolio, and maybe we'll jump on this in a few years and talk about where you're at then. So anyways, thank you again.
Yeah, that was great, Joseph. Thank you.
Thanks for having me.
Thanks for listening to the Rent to Retirement Podcast, your #1 resource for wealth building real estate investing and stress-free retirement strategies. Continue your real estate education and invest with us at renttoretirement.com.